Hey guys, Max Convexity here. Let's check out these Defiance funds. It's lunchtime. See what's going on with them. Russell's blowing up. Those are Russell futures. Let's check out Russell Cash. Here's your Russell Cash, opened under the profit box and is now right about at the top line. So we'll check IWMY because these guys trade Russell options, of course. They sold the 2025 strike for $18, just about $18. And right now, the market's at 2023.74, so we're almost to max profit. Just $1.26 less than max profit. Anyway, these guys are going for $1 million. Hopefully they'll get it all today. That'd be awesome. It's going to take, if they do have a win today, they're still going to be negative 43 cents on an earnings per share basis on the month. But that's the bad news. The good news is the dividend looks, the potential dividend they might pay using the extrinsic premium they've captured still looks really nice. All right, let's look over here at NASDAQ, NDX. This is what QQQY trades. Same thing, or this one was out of the profit box for a little bit, but it's turned around, it's rallying, and it's back in the profit box. It's right about at the middle line right now. Let's see what the spreadsheet says. Yeah, spreadsheet says we were, okay, well, let's just do it this way. We sold the 1870 strike for 107 bucks. Okay, so 1870's what we're looking for. We at least need more than 1870 less 107, which is 1793 or 17963. Anyway, right now the market's trading at 18,000 even, 18,001. So we're right between the two of them. We're 68 points shy of the 1870 strike price. So that's how we get the points in the money, and that's why there's a deduction from the max value we're going for is 1.7 million. If we had to close that trade right now, it would be worth 600,000. Still be a nice win, and it would take us to 11 cents positive on the month earnings per share. Potential dividend looks good still. Let's check out SPX. This is what JEPY trades. This one looks strong too. It's right about at the top line, which is the max profit line. So let's see what JEPY did. They sold 260 puts at the 5100 level. So 5100 is the magic number for max profit. Right now we're trading at 5098. So we're 1.8 points away from max profit. That's why there's a slight deduction from the 574, which would be the max profit we can make. If the market was closed right now, we'd have to buy those back for $1.80. We'd only make 528,000. It'd still be 40 basis point capture, 7 cents per share, and it would take us to 8 cents a share positive on the month. Dividends looking about like last month, the potential dividend. So that's all well and good. And then we got new trades on Tress. These guys sold a, all right, these guys sold a straddle. These guys sold a straddle, which is selling an at the money call and an at the money put. And they sold a straddle that expires in, it expires on March 8th. So that's 2 weeks. And then they bought a strangle, which is buying an out of the money call and an out of the money put. That's what a strangle is. They bought a strangle that expires in 4 weeks. They bought twice as many strangles as they sold straddles. They sold the straddle 390 times. And they got, they got $1.05 for the call and $1.08 for the put. Or is that vice versa? Maybe vice versa. $1.08 for the call and $1.05 for the put. Okay. But they sold those, and they did that 390 times. So in the next 2 weeks, to achieve max profit, we want to be right at 92.5. Because remember, the sold strike is always where max profit is. These strikes out here are more like hedges or insurance or just, you call it wings. This is a straddle strangle swap is one thing you could call it. You could also call it a ratio diagonal calendar, a calendar ratio diagonal spread. Well, diagonal is a calendar, so you could call it a diagonal ratio spread. Diagonal means calendar. You don't have to say it. So it's a diagonal ratio spread. It's a diagonal spread, ratioed. Twice as many longs as shorts. And that's great. This is a great trade, and it's great in a long volatility situation since we have more long options than short options. If we get a volatility event, sharp move up, sharp move down, this thing could really profit. But in the meantime, I think what they're hoping for is kind of a steady market, and they're hoping to collect all the extrinsic premium off these at the money calls and at the money puts. Then we'll see what they do when these expire in 2 weeks. The last time they just sold some different calls for 2 weeks later, which would be the 28th, I think, or 22nd. Last time it didn't work out very well. It caused a pretty good sized loss. We'll see what happens this time. I'll keep an eye on it. All right, guys, you have a good one. I'll be back this evening about 5 o'clock, and we'll talk about where we ended up on the day and all that kind of good stuff. We'll look at tracking error also, or buffer, or whatever I'm calling it these days. All right, take care.